Hi, everyone. Welcome back to the channel. It's Sebastien Boyer, the approved guy. Thanks for visiting. Today, I have a special guest with me, Chris Kirkpatrick from Life180. If you don't know who Chris is, I'm going to let him tell you all about himself and why we're having this interview. What it boils down to, guys, is you're about to get a lot of value and information. Your finances, your business, your generational wealth, and your legacy. Hey, Chris, thanks for being on the channel.
Hey, what's going on, man? Awesome being here.
I appreciate you visiting and taking some time to join us. So, Chris, if you would please just introduce yourself, tell everyone a little bit about your backstory. You know, every superhero has a backstory, so you got to tell your superhero backstory.
Oh, man. That's funny. Man, where to start? So I guess start from the top. I run an organization called Life180. We basically work with life insurance agents. We help teach people how to leverage life insurance as an asset in their life to help increase the financial efficiency in their life and all the other areas. I'm a big believer that people really need to focus on financial structure much more than they need to focus on rate of return in their investments. And that is the biggest challenge that most people have in their personal finances. They have this gap of relationship when it comes to their money from a financial structure perspective. And because of that, I think there's a lot of misunderstanding about okay, what does that even mean? And so we could talk about that a little bit today. But I run an organization, obviously, that we've got over 120 life insurance agents now that we're coaching and working with and building, and run a fairly good sized YouTube channel helping people. But my background before I got into Life180 is I was the director of business development for the top IUL company in the country. I kind of had some realizations the more I got behind the curtain, so to speak, and the more I could kind of see the wizard behind the curtain and realize it was a bit of a fraud compared to what I thought I was selling. And the more I learned, I'm just kind of one of these people that I have to be able to put my head on my pillow at night and be able to sleep and know that I'm actually doing things to help people, and got to the place where I started to question whether what I was actually doing and the products that I was utilizing to help solve people's problems were actually doing that. And so I started having pretty high level conversations and asking the questions that the corporation didn't really want you to ask. And as I kind of got the answers to these things, I started feeling more and more uncomfortable. And it ultimately kind of hit a tipping point where I was like, all right, I gotta make a change. And so I walked away from a lot of money, walked away from a lot of security, walked away from a lot of friendships, and just had to kind of restart my career. And I kind of in the last, I don't know, 8 years since that time have dedicated my life to really trying to coach agents and coach individuals how to structure their life in the most efficient way, to help them reach their goals and objectives. And then also for agents, teach them how you can utilize life insurance as a foundational kind of cornerstone asset in their clients' lives. But when you do that, you have to make sure you understand how to design it properly, where it fits in the right areas, the problems that it solves, the problems that it doesn't, the problems that it can create if you don't do it the right way, right? All these different things. And so I'm really big on transparency and education. And, I just kind of come from the mindset that if everybody knew what I know, that the whole world, from a personal finance perspective would be a completely different place, because life insurance agents are typically not taught this stuff, and they don't traditionally educate their clients in a very transparent way. And it's not because they don't want to, it's because they just don't know what they don't know, because these carriers, the companies that are selling it, they don't teach it. Right. And so I kind of have taken that on as my calling and as my mission. And that's what I love to do. And that's why I create all the content that I do, and try to give as much good free information as possible. And so here we are today, and we're growing, and we're focused on trying to serve as many agents as possible. And obviously the trickle down effect is I want to have a positive impact in over 1 million families through the Life180 channel over the next 5 years. So that's where we're going.
Awesome. So for those watching, just so you know, Chris is one of my mentors. He has taught me a lot about the industry. I've been an agent, a life insurance agent, for about 5 years. I was always very hesitant on selling the IUL product, so thank God I didn't sell too much of that. And I didn't know why, but I just felt something was wrong or something was off with that product. And then I met Chris, and I started watching his YouTube channel, and just through the channel, I've learned so much. So definitely, if you really want to dive in and learn a lot of information about life insurance, dive in, go to the Life 180 YouTube channel. Um, but Chris, a lot of folks watching are at different levels, right? Some people don't
Yeah.
even know what IUL means, right? So let's take a step back, maybe, and let's what is that? What is IUL?
Break it.
Like what's like why is it even an issue or a problem?
Yeah. So, I think it's this is that life insurance, cash value life insurance has traditionally been known as whole life insurance, right? Like that is like a lot of these mutually held life insurance companies have been around for literally 180-ish years, 100 to 180 years. And there's a lot of companies that kind of fall into that spectrum. There's been a lot of success with companies that sell whole life insurance, helping solve certain financial problems. Like I always kind of tell people, life insurance is not an asset, is never an asset, should never be viewed as an asset. And if somebody's selling you life insurance as an investment, I should say, then it's not an investment. And if it's being sold to you as an investment, it's being misrepresented. Now, what life insurance is a great savings alternative. It's a great place to keep safe, liquid, accessible. It's great for kind of the emergency funds, opportunity funds, reserve accounts for operation expense accounts for businesses, for people that have like trading funds, and like there's a million use cases for it. But the purpose of to me, a properly designed life insurance contract is to take place of a savings account in your life. So what happens is I talk to most people and they say, yeah, like, do you believe you need an emergency fund? Most people say yes. Do you believe you need like an operating fund if you have a business, like you want to have more control of that? Most people say yes. And then when you ask them what they're doing, most people don't have it, so we can help them figure out how to set it up.
Right.
B, if they do have it, the next question is, all right, where are you keeping it? And typically it's in a savings account where they're losing money to inflation over a long period of time. And so all this is when you put your money in a properly designed whole life policy, you're shifting the risk from the bank to the insurance carrier, which is much more secure, by the way, like from a long-term perspective. And you're basically giving yourself protection against inflation. The life insurance company is going to preserve the purchasing power of your money over a long period of time. Now, to answer your question, I had to give that kind of background to make it make sense. What's happened is, since 2009, there's been a product called IUL, Indexed Universal Life, which is basically a universal life insurance platform that is being kind of positioned and marketed with as having all the benefits of whole life, but having more upside potential. And so the challenge is there's a lot of TikTok influencers, Instagram influencers, YouTube people that are misrepresenting what this product really is. And they're selling it as a very simplistic financial tool when in fact it's a really complicated, complex product. And most agents don't even understand what they're selling. And so my background, and I understand how it happens. My background, like I said at the beginning, is I used to be the director of business development for the top IUL company in the country. And I was guilty of this, right? Like I drank the Kool-Aid. I, ate the bait, hook, line, sinker, and sold a lot of premium over the first 4 years of my career, went through the ranks, started training people. And my job was to teach people how to build their businesses selling this stuff. Like that's, when you look at that, so I get how it works. I get how people kind of fall prey to the appeal of the story of Index Universal Life as this kind of like upside potential, downside protection product. The challenge is that it never fulfills the promises that kind of are promised to people in the way that they're sold. And when I look at money, and when I look at people's relationships with money, and when I look at most people that we talk to and their goals and objectives when it comes to their life, at the end of the day, you got to make sure that, your expectations are in alignment with reality, and the products and the tools that you're using to accomplish a goal for yourself is in alignment with reality, and that the expectations are reasonable, right? Like, so like if I'm putting money into it, it's not that it's a horrible product, but like if you're expecting a certain result for you by putting money into any product, and the reality is, even though you think it's going to get you 100% of your goal, it's going to get you 30% of your goal. Well, if that's the case, that can cause a lot of problems in your life, right? And so I kind of, getting into the business, when I first joined the business, is I guess a part of my story I left out. I joined in 2009. And so if anybody remembers 2009, after 2008, and the market was just kind of chaotic, and I went to join my father-in-law, who was a broker with Wells Fargo Advisors. And I remember talking to the manager, and, I just came off of a stint playing poker for a living for 7 years, right? And so he basically was like, Chris, listen, I think you'll kill it. I think you'll be amazing in this business. But if I hire you, they're going to fire me. You have no industry experience. You got the relationships and the personality, and you understand the business and all these different things that I think you'll do really well. But you got to go prove yourself for me first. And so I was like, what do I do? He's like, well, go get a job at an insurance company. They'll hire anybody. And I was like, all right, I'll go do that. And so the crazy part is, once I got into that space, I started like learning things that I didn't know, right? I didn't know what I didn't know. So getting into the life insurance space, the one part about my experience at my first company that I was just like so grateful for is learning about the market risks, and learning about volatility, and learning about just all the fees and all the just things that like most people are not educated about. And so all at the same time, I was going home, and, I have a really close relationship with my father-in-law, and I watched him just battle and struggle emotionally, because he's a really good guy, and he means really well for people. He meant really well, wanted nothing but the best, and was doing the best he could with the information and the tools he was provided with being a financial advisor, right? And yet he was coming home, and there were times like I thought like suicide wasn't off the table. Like, and I'm not saying that lightly, like, he was managing a big book of business. We're talking, 9 figures, a good 9-figure book of business. And when you lose 30 to 40% of that kind of book of business, and people's livelihoods are your responsibility, the level of stress with that is astonishing. And so for me, that experience, it was just like this weird environment for me. And it really formed my belief set on what our role is in people's lives when it comes to helping coach them. And one of the rules that I made for myself is that I'm going to set up a set of rules for my practice, and only make suggestions in a way that I'm never going to have to say I'm sorry to anybody. And that's what really got me excited about Index Universal Life, is that this upside potential, downside protection story. But then I'm telling you, 3-4 years into it, I started to realize like, whoa, this isn't what I thought it was. And in fact, I am going to have to say I'm sorry to a lot of people. And by the way, I had to say I'm sorry, because when I left, I had a lot of people, a lot of business acquaintances, a lot of family, a lot of relationships of people that I sold policies to, that I had to kind of eat crow and go to and be like, yo, I know I sold you this, but I'm sorry. This is kind of why. This is what I believe. This is why I did it. And this is what I've learned since. I apologize. I gotta kind of take my lumps, and you don't have to make a change, but based on what I know now, this is what I think you should do. Not everybody did it, but I had to go with full integrity and have those conversations. That was probably the hardest time of my career.
Wow. Yeah, I can imagine that must have been tough.
Yeah.
Wow. So basically, you started off, killed it, selling the product, became more educated about the industry, about financial literacy, about the product, about how things really work in the background. So can you tell us, technically, like, what are some of the issues that you saw, that you came to understand, that brought you to that realization?
All right. So like I said this once, I'm going to say it again. IUL is sold as a very simplistic product, when in fact it's hyper complex, right?
Right.
And so I actually just did a video the other day, and it was to this point, and it's when you think about index universal life, it's sold on upside potential, downside protection, with upside potential because of market participation through an indexing strategy, right?
Right.
Anybody who's ever looked at IUL, you probably understand that vernacular. And so the reality with IUL, and this is where it all falls down, the reality of it is that the market performance really has almost nothing to do. I'm not going to say nothing, but pretty close to nothing to do with the actual performance of the policy. And that is the challenge. That is one of the reasons I created the IUL challenge, showing that these things don't perform ever the way that they're sold. And the reason that I can make that challenge and know that these policies are not going to perform is because we just came through the greatest bull run in the history of the markets, right? Yet these IULs that are promising upside potential didn't provide upside potential in the greatest bull run ever. So if they didn't do it then, when are they going to do it? They're not going to do it. And so the question then becomes why, right? We got to ask the tough questions and go deeper and ask, okay, if that is the case, it's not some conspiracy theory. The life insurance companies aren't out to stick it to you. Right. It's not one of these things that a lot of uneducated advisors or agents on the other side that love whole life that hate IUL. It's not what a lot of them think, where they're saying, oh, well, they're reducing the performance so they can keep the profit. Life insurance companies are not doing that. That's not how they function. What happens is you have two components that are ultimately the driving forces of the performance of an IUL. You have an options budget, which is basically you put your money into a life insurance contract. You basically give it to the life insurance carrier. They put it into their general fund. That general fund is going to kick out a return. Let's call it 4.5%. Out of that 4.5%, a portion of that, let's call it 4%. And this isn't exact numbers, but just hypothetically, out of that 4.5%, the general fund's going to do, let's call it 4%. They create an options budget. That's the amount that they know they can get a return on your deposit. Let's say you have $10,000 of account value in your IUL, right? What they're going to do is they're going to say, okay, we know that we can create an options budget of 4% of that money. So they're going to take $400 out of that. That's how they give upside potential, downside protection. They're going to take $400 that they know they are guaranteed to get as a return with the bonds and the investments that they do in their general fund. And then they're going to buy call options with it. So the options budget is one component that is a driving factor. The other component are the options costs. And the reason that the last decade, even though the market's been booming, IUL performances have been getting worse and worse and worse is because it has nothing to do with the indexes. It has everything to do with the options budget and the options costs. And over the last decade, 2011, the general fund, the options budget for most of these insurance carriers was 6.5%. So that instead of a $400 options budget in this example, we would have a $600 to a $650 options budget. Now that may not seem like a lot, but we're talking 50+% increase in an options budget. So this adds up significantly, right? And now we're lower. The other thing that's happened is that the options costs have gone up. So we've had this perfect world scenario, or almost perfect storm in a negative way, where options budgets have been going down, options costs have been going up, and all the while the market's booming, it's irrelevant. It doesn't matter because cap rates have been coming down, participation rates have been coming down, spread charges have been going up. All the factors that make your policy perform well or not well have to get manipulated. Now, it's not that the insurance is manipulating them to kind of stick it to you as a policyholder. They're changing them because they just can't draw blood from a rock, right? If the options budget goes down and the options costs go up, well, then the cap rates have to come down because they just can't get you the big returns because you're not buying enough options to be able to quantify those results.
Right.
Does that make sense? Did I explain that clean? I mean,
yeah.
Clear in my mind, but I realize it's one of those things.
Yeah. That's so technically that's what's going on. Now, besides that, how about as far as, folks wanting to use a life insurance policy to have early cash value access, right?
Yeah.
So is that another concern or issue that you would?
Totally. That's the other part about IULs that they don't talk about is life insurance companies are all about risk control, right? And everything is actuarially done. And so The thing with IULs is because there's so many variables that they don't control, and they don't know what the market's going to be like next year. And so they have to be really careful and not expose themselves to too much risk, right? And because of the way that they do it, and these products are built, they have to create what we call surrender periods, right? Surrender charges with the policy. So like, for instance, in the example that I used with $10,000, if you got $10,000 in an account value and it's year one, you probably have like a surrender value of like maybe 3,000, right? So if you have a surrender value of 3,000, that means that's all you have access to. You don't have access to the full 10,000 because the rest of it is eaten up in a surrender period. And it's not that it's not working for you behind the scenes, but it's kind of like a 401k in a way. Like, it's there, you just can't touch it, you can't use it, you can't leverage it. And the problem with that is there's like a level of smoke and mirrors or misleadingness to this, because they're sold like they're this like great alternative to a 401k or something like that, like kind of a rich man's Roth, and you have access to it, when in fact, maybe 10, 15 years from now, you'll have liquidity of it. But the problem is 10 to 15 years from now, it's not going to perform the way you thought it would. So you'll have less than you thought you would have. And all the while, the first couple of years, you're going to have less than you thought you had too, because of the surrender charges that go with it. And so
you don't have the early cash value that you're expecting. And then at the end, you're not going to have the cash value results that you're expecting based on so far historical performance that can be verified and proven. You know what? You mentioned it a little earlier about your challenge. Can you go ahead and put that challenge out for those that are watching or listening?
I'd love to. I'm like doubling down on this right now. And so the challenge is simple. It's simply saying, hey, I'm really tired of IUL agents trying to say that, they're right and I'm wrong and whatever. I said, okay, if I know I'm right, first of all, and I know to the point that I'm right, that I'm willing to pay you if you can prove me wrong. And so I created the challenge saying, all right, based on a lot of the variables that we just talked about, I just show me a 10-year-old policy, a policy that has gone through the surrender period, which is typically 10 years, where the policy was sold. And by the way, once again, 10 years ago, we experienced a great bull run, right? So they should have just, if they're sold with upside potential, downside protection, they should have outperformed what they were sold as, right? Because they were sold with conservative illustration assumptions, right? That's how they're always talked about. And so when we look at that, I say, all right, show me the original illustration submitted, which is not hard to get for any agent that sold the policy. Show me the original illustration submitted with the policy, and then show me an in-force illustration 10 years down the road, where the in-force illustration, meaning the current performance of that policy of here moving forward and the projections moving forward, match at least what was sold. Mind you, based on how they're sold, they should have outperformed drastically what they were sold as. But I'm not even asking for that. I'm just saying, just show me a match.
Right.
And nobody can do it. Nobody can do it. And it's not because of the market. It's because of everything we just talked about. The market is almost irrelevant when it comes to the performance of your policy. And I always kind of tell people, IUL is simply a universal life platform product with an options strategy attached to it. So if you don't understand the options market, you should not buy an IUL. If you understand the options market like deeply, and you then decide that the risk and all the stuff that goes along with it, and you can manage it, is worth it for you, then God bless, go nuts, you know. But like, that's not, nobody does that.
Yeah,
like,
you don't know what you're buying, and you're buying something based off of, what sounds good. You're putting yourself at a very high level of risk for failure and disappointment. Whether it's an IUL or it's a car that you think has a souped up engine and it's really a piece of junk. It's it's smoke and mirrors, it's lies. So that's unfortunate that those products are out there, that they're being sold like that, and so many people are buying them, and unfortunately one day they're gonna have to be held accountable at some point. Would you say?
Well, what's the most unfortunate part about this, Seb, is it's not the agent's fault, right? I mean, it's the agent's fault from the perspective that, like, okay, we should all be digging deeper. We should never just rely on the carrier to do our training and our coaching for us. We should all, and that's whatever. But I can't necessarily say that I don't get it, right? Because I do get it, because the real problem here, the real culprits here are the companies themselves, because they create these products. Like if we go back through history, it was the wild, wild west in the IUL space from 2009 to 2015. There was like very little regulation. You could illustrate products with astronomical assumptions. You could illustrate 4% positive arbitrage on policy loans, which is like mind numbing. Can you imagine running a life insurance illustration with 4% positive arbitrage on policy loans? Like there's not a better asset in the world that looks like it on paper. But that it just doesn't work that way.
Right.
But then in 2015, the regulators kind of grabbed hold of it and they created what's called Regulation AG 49. Now, in 2015, they did that. They set some parameters in to kind of govern how illustrations had to be done. They put in the historical hypothetical look back model, which kind of like set the barometer of like what kind of rate of return can you expect. They did a couple other things. They reduced the positive arbitrage limit to 1%. But then what happened was the agents are not the problem. The companies then said, all right. And like at this point in time, like I'm not going to name company names, but there was 2 companies that like really went nuts when it came to creating other things like multipliers and other kind of riders that you could bolt onto the products that would make them illustrate really well, but they also injected more risk, which is completely the opposite of the spirit of the product, right? And so like it's just people didn't understand it and it was being missold, and it wasn't the agent's fault. It was the companies that were kind of like building these products and trying to get around the new regulation, right? And so like then, from 2015 to 2020, that was all happening. And then finally 2020, they came out with Regulation AG 49A. They updated it to 49A and they changed it a little bit more. But once again, carriers try to get around it and they're building new products, and they created like the proprietary indexes, and they did all these things, which, like it just goes to show it. And the sales force, the people, the agents selling this stuff, they're just kind of repeating and regurgitating what the companies are saying that they should do. So it's hard to like, hold them accountable when I get it. Like if a big Fortune 500 life insurance company is saying, hey, this is what it is, blah, 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 blah. This is how you could sell it. This is our history. This is expectations. And it's out of reality. But like most people are going to take that at face value. And so it's hard to fault them for that. But all I can say is like, look at the regulatory history. These companies are playing these illustration war battles, trying to win like this ledger battle to make them look really sexy on paper so they can sell more, realizing that they're never going to meet those promises. And agents are just kind of falling into it. And if you look at right now, Regulation AG 49A is in the process of being updated and will be updated in 2023 here. To reduce it even more, to eliminate the ability for positive arbitrage. And they're actually reducing the ability to illustrate income to the levels that they are now. They're going to be reducing the income illustrations on IULs by up to 50%.
Oh, wow. Wow.
So when I talk to people, when people are like, Chris, you're wrong or whatever, it's like, if I'm wrong, like let's use like take my opinion out of it, do some critical thinking for yourself, right? And just use some common sense. Like my mentor, Brendan Burchard, used to say, common sense is very seldom common practice, right? Like, so let's take all the technicals, let's take all the industry jargon, let's take all that out of the equation and use 2 things of common sense, right? First of all, regulatorily speaking, would these regulators be changing this constantly and be fighting with the companies if there weren't a problem? The answer is no, right? So who are you going to trust? These companies that are just trying to like make money, or regulators that are trying to actually protect consumers, right? That's first. Secondly, when you look at an IUL and you look at an illustrative rate and they say, yeah, we can get you 6 to 6.5% predictable. Look at the cap rate, look at the market history, all this stuff. And it's a conservative number because that's how most of them sell it. Like you should be able to lean on that number on a pretty conservative basis. And so if you use common sense in that and you say, all right, I'm giving my money to the insurance company. The insurance company is then taking that money and buying options based on a budget that's created. And they're doing that. and then they're going to get me this great return. Well, if the insurance company is having a hard time getting 4 to 4.5% for themselves, how in any common sense world do you think they're going to be able to get you 6.5% in that same world, which is basically more than 50% higher than the return they're getting themselves? How do you think they're going to do that for you on a predictable basis? If you think about it in those terms, you go, oh, okay, yeah, this doesn't make sense, And so it's interesting to me.
So, do you know if it's for a fact that do any banks or insurance companies actually own any index universal life insurance?
I'm sure there are some somewhere that do. I don't know of any specifically, but I do know of a lot of banks and a lot of corporations that own whole life insurance, and they utilize whole life insurance as a tier one asset on their balance sheet. And so from that perspective, um, I'm going to go with that all the time. Because if you think about it, IUL doesn't really work as a tier one asset because it doesn't have the risk, or it doesn't have the guarantees. It carries more risk with it. Because of the surrender charges, it doesn't have the liquidity. So, these banks and companies aren't able to use it in that way. And so it just doesn't make sense when you look at the profile of the product and the attributes of the product. Let's get rid of the names. Let's get rid of, IUL versus whole life. Let's look at the actual attributes. Let's think about what you want to accomplish. Let's think about what problems you need this product to solve for you, and what role you need this product to fill in your life. And when you start looking at the attributes side by side, the story kind of plays itself out, I feel like.
Yeah. So let's switch gears, and from another perspective, there's a lot of financial advisors, and I'm not going to name names, but like debt elimination coaches or whatever, that they are completely against any whole life index, anything at all. Their whole strategy is, if you want to use life insurance, only use it for the death benefit. So buy term insurance,
Buy term,
and then go ahead and take your money and invest it in the market, right?
Yeah.
So first, like, why are they even? What's their logic there, and where are they off? Like, what's wrong with their thinking? From your perspective.
Oh man, so there's a lot there. I mean, first of all, it's a scarcity mindset to think that. Well, here's what I'll say is, the whole utilizing life insurance just for the death benefit. I mean, the death benefit's a great part of it. Obviously, we got to be thinking about things from an intergenerational perspective, I believe. And I think biblically speaking, it's our job to leave the next generation with more than we had, more than we came into this world with. And that's, by the way, that's not just money. That's like education and financial principles and teaching them how to be good stewards of everything, I think that's important. And so, there's a lot of good that comes out of some of these people that try to teach you getting out of debt and managing your cash flow a little bit better and being more responsible and not living above your means. And, I would say like that stuff is very kind of like 101, like it's very basic. When it comes to like utilizing insurance, I would say the power of insurance is the ability to get your dollars to perform more than one function in your life at the same time, right? And so it's simply leverage, right? Because like I said at the beginning, life insurance companies, they're not investments. If I would say these people don't like whole life insurance, for instance, or IUL or anything, but specifically whole life I'll speak to. They don't like it because they don't understand it, right? And if they do understand it, then they're just being deceptive, right? Like in their tactics. But I'm going to give them the benefit of the doubt and assume that they just don't understand it. There's a lot of different ways to design policies, and I would say that some of these people would say, oh, I don't like whole life insurance because your money is not liquid until you're 15, or something of that nature. Like you're highly illiquid until you're 10, 12, 15 in the policy. So it makes no sense. Like I hear that, my head wants to explode, because it's like we create policies where people are highly liquid. We're talking like 88 to 92% liquid year one, right? Like year one with the policy that you put in. So you got this liquidity. It replaces your emergency account. It replaces, the life insurance need. It covers that need, and you have it forever, right? The biggest fallacy, and I've had, the crazy part is I've had 2 conversations this week already, and it's only Thursday, right? 2 conversations with people this week already that have term policies They were not convertible term policies, meaning they could not be transitioned to whole life. So they were just basic cheap term, the exact kind of policies that these people would tell you to buy. And one of them has cancer again, right? And he had cancer 6 years ago and thought he was clean, went in for a check and has cancer again, so doesn't qualify for insurance. And this person was calling up to try to put $100,000 a year into a premium, right? Successful person, can't do it, not insurable, wants to get more, is starting a family, has a couple young kids. His term insurance is about to expire. Can't get more insurance.
That's horrible.
Like, it's the worst, right? Like, and so this is something that had he just followed our strategies and advice, not only would his insurance on a net basis over a decade period have been cheaper doing our advice, he'd have more and it'd be guaranteed forever. Like, so when and like I said, I got 2 stories like that this week alone. And so when you start to like live this stuff and have these conversations with people where it's like the implications of the generational effect of this it's real, like, and it really hits you. And that's why I think our job, right, is to take that responsibility on to educate people and to help people make the decisions that are best for themselves and for their family and for their goals and for their objectives. And, I always kind of say to people is like, the biggest problem, I don't want to derail this conversation, but I got to say this. The biggest problem with people and their money, especially in the United States, and I can't speak to the rest of the world because I'm obviously not like culturally tapped into the rest of the world, but I can say in the United States is that the reason 95% of the people in this country are in trouble when it comes to their money. They're not on pace to be able to maintain their standard of living when they retire. So there's all sorts of uncertainty, all sorts of like just volatility that is going to be injected into people's lives. And I believe that the reason that is because your money is not in alignment with your values and beliefs. And that's what I love doing more than anything else. When people ask me what I do, I just say, hey, I help people align their money with their values and beliefs. That's all I do. Because like what I do, what you do, right, is not for everybody. Right. And we can't go into any conversation thinking we got to like fit a square peg into a round hole. Like I have no interest in trying to convince anybody of anything. But like, if you share my values, if you share my beliefs, if you kind of have similar objectives for your life, if you believe that it's your responsibility to kind of pass it on to the next generation, and like you share my values and beliefs, at least to a certain like extent, now we can have a conversation about like, okay, how do we help you actualize achieving that, right? Like, but it's got to start with the end in mind, and then you got to reverse engineer a program to get there, right? You got to reverse engineer a plan to get there. Right. And the reason I'm against the buy term and invest a difference thing is because there's no way that you can accomplish what your objectives are on a guaranteed basis by buying term insurance. Right. It's impossible.
Yeah, it makes no sense. I think, if you agree with me that part of the problem is that because of how life insurance has been sold from an abusive standpoint, right?
Yeah.
They, rather than condone it or promote it, they just say, just don't even go there, because so many people, so many agents backed by the various companies that are promoting it this way are selling it as an alternate investment strategy.
Yeah.
Which it's not, right? It's what you said is it's a safe place to park your money, or it's an alternative saving strategy. So if anything, you should use this as an alternative saving strategy, and then from there take out or borrow from your policy to invest. And that way you have a win-win, right? Mm-hmm. You're not risking your money in the market and where it's completely exposed, because at least you have some protection with your money in the policy. Versus just taking it out of your savings account. And I try to tell people that, look, if your investment goes south and you took the money from your checking or savings, you've lost it. It's gone. There's no recuperating it at all. Right. Yep. But if your money's in your policy and you borrow from the policy and the investment doesn't go as planned, there is some salvage there. Long term, your net worth, your asset, which is the insurance and the death benefit, it can help you protect that money, right?
100%. And you can build it back. You can build that asset. It may take a little time, but you can do it. And There's no doubt, and from that perspective, there are kind of like two sides of the pendulum. There's the people that sell life insurance, and it's like highly commission focused and highly driven and highly liquid, and like those, that's bad. And then you got the other side that people like overhype the benefits and sell it as like a great investment and all these things that it can do for you. And like most things in life, the truth kind of lies in the middle, and that's kind of where we try to be and educate people as to. Once again, there's a lot of different ways. There's literally, if you gave me enough time, I could probably come up with 100 ways that I could utilize life insurance in my life, right? And so from that perspective, like, it's not a matter of like trying to just use this product for everything. It's a matter of figuring out like, what are your goals? What are your objectives? And how do we help you accomplish that? And if this tool can be utilized to accomplish a desired objective on a guaranteed basis. Remember, my core foundational principle that I live by is I'm never going to want to tell anybody I'm sorry about this stuff. So I'm not going to create a program that, is anything but putting into play. The only variable to your success is you and your ability to execute. Right. Now, that's why I only want to work with people that are kind of like entrepreneurially spirited, that people that want to take radical self-accountability for the results in their life.
Yeah.
That's who this is for. And if you don't, then this is probably not for you.
Mm-hmm.
Like, honestly,
So if you could, let's talk a little bit about Life 180.
Sure.
And, tell everybody, what is Life 180? What is Life 180 offering? I'm an agent, right? Working with you,
Yep.
as part of your team.
Yeah.
And so I can vouch for Life 180 myself.
Yep.
And so, just maybe for agents listening,
Sure.
How can Life 180 be of value to them?
Yeah, so one of the things that inspired me to create Life 180 is that there's some companies out there that are good on product education. Not very many, but there's some that really help educate on product around different companies. Like most of the time, the challenge is like you got to focus on just one company, and it is what it is, and you kind of do what they teach you. And I obviously have a big challenge with that, right? And so Life 180 is more of an independent agency model. We work with a bunch of companies. I just am a firm believer that not one company does all things well. So if you're just offering one or two companies even, then you're not really able to serve people at a super, super high level, right? And you're not able to ever, with 100% certainty, say that you're able to like do what's absolutely in their best interest, right? And have access to all the tools at your disposal. And so we work with a bunch of different companies, all the major players in the life insurance space. We have good contracts with, and we can work with. And so our focus is to educate agents as to the internal workings of each product, what company does what better than others, and what fits, what designs, and like teach you how to do that of policies. Now, on the other side of it, it's the marketing side. Like most agents are horrible marketers, and they're not great with sales and communication. And so we are kind of a hybrid agency where, my passion is to build a community of people that are out there looking to serve people. And that is all done through agents, obviously, that are licensed and going through. And so when agents come with us and they, do the contracting and kind of appoint their license with us, with carriers, we give them marketing training, we give them product and sales training. We give them the support, and everything that they need. I mean, it really is my main focus right now is to just help people succeed and do this in the right way. I see there's so much bad marketing going on out there, like misleading is what I mean by when I say bad.
Yeah.
Going on, that I just want to create an army of people that are doing it the right way, that are actually out there to serve people, that understand what they're doing and are willing to go slow to go fast, because it's easy to do this, to kind of sell based on hype and kind of half truths and all that stuff. Like, you could sell a lot more. Don't get me wrong. Like if you're all about the money, and you're not about serving people, well, that's going to, you're probably going to be drawn to that,
Right.
But for me, I love the phrase, be willing to go slow to go fast, because you may have to go a little slower at the beginning to take your time and learn and educate, work with the right people, get the right mentorship, like all that stuff. But if you do that, it's sky's the limit. You'll accomplish so much more because you'll build so much more trust with people. People will have more faith in you. People will share you with your information. They will edify you because you're actually going to make an impact in people's lives, because what we do is life changing. I truly believe that. I cannot tell you how many conversations I have with them every single week where people are like, oh my gosh, I literally just prayed last night and thank God that I found you, because the information that you've given me on the last couple of meetings and how your team has helped me just organize and get, closer to my objectives. And now I have a clear path, and it's like all there, like it's life changing, And so like, to me, that's why I do it. Like it just, those are the things that, like, you have those conversations every day. You wake up every single day fired up. Like, people ask me, how do I have so much energy and I create so much content and I do all this stuff? How do you do it? It's like, if you had the conversations I had every day, you'd be fired up too, like it is what it is,
Yeah, I agree. Yeah. Plus you have firsthand experience, which is,
Yeah.
And that's where I'm coming from too. So I feel it, and I feel this conversation. Um, didn't you also recently include a feature or aspect of Life 180 that also helps to educate people and strategize on debt elimination as well as
Yeah.
building wealth? Because obviously, the strategy of whole life insurance, high cash value, and is a more of a wealth building strategy. But if someone is in debt and they don't really have cash flow, should they be doing that, or when should they do that, and or should they should they still do it on a smaller level and then transition, or if how is the debt strategy, that elimination strategies that you're teaching,
Yeah.
going to help them to get there?
Yeah. It's interesting. So, it's, we love to talk about the wealth side, like the wealth creation stuff, because that's the sexy, fun stuff, right? But the reality is, in all these conversations, you look around, right? If 95% of people in this country are not on track to be able to maintain their standard of living when they're retired, that tells me that 95% of the people in this country need help when it comes to debt, when it comes to managing cash flow, when it comes to understanding and rebuilding their relationship with how they handle money on a day in, day out, week in, week out, month in, month out, year in, year out basis, right? And so, like, the debt elimination side is really just the core foundational thing, saying, all right, yes, I do believe that you need to get a policy. Yes, I think whole life insurance eventually should be a cornerstone foundational asset in your life. And, maybe it's sooner, maybe it's later, but at the end of the day, it's not about selling a product. It's about helping you reach your goals and objectives, right? And so a lot of times that starts with, how do we eliminate debt? How do we get you to zero? How do we increase your financial efficiency to make sure that you're not bleeding money and leaking money all over the place? Like, I always use this analogy is like, if money is water, right, and your life is a bucket, and you got all this water coming in, and your bucket, your life has got all these holes, all these leaks in it, are you going to just turn the water on? By the way, which is what most people do. They're like, oh, I'm just going to earn more money, and I'm going to do this, I'm going to save more, I'm going to put more into these things, and you just turn on the water spout faster, and you're filling the bucket up. Well, you can turn the water on as fast as you want. The bucket's never going to get completely full because you got so many holes coming out. It's all just going away, right? Conversely, if we could just plug the holes, we could turn the spout down to a trickle, right? And eventually it's going to fill up, And so the only way you can do that is, and I'm not saying go down to a trickle, but I'm saying, what if you could just like not have to, go into hyperdrive with the spout?
Right.
If you could, at a normal level, increase your financial efficiency, plug the holes in your life, recapture the money you're losing unknowingly and unnecessarily, and reposition that money. Once you have that figured out, then you can reposition that money to save for wealth creation later. But the first step has always got to be increasing your financial efficiency. And so we created a debt program. We call it a debt program, but where we've got consultants on the team that are trained to go through, and we have software, and we have a program where you get coaching, and it's like literally monthly coaching to help you achieve your goals. And because that's what, I don't want. One of the things that I was hardcore about is I didn't want Life 180 just to be like this elitist, like you got to have at least 20 grand a month or a year to work with us or something like that. I really wanted it to be about serving everybody and helping everybody get the information they needed to achieve the goals that they were after. It's not about me telling you what you should do or shouldn't do.
Right.
It's about you understanding the things and the questions that you have to ask yourself, because the quality of our lives are directly correlated to the quality of questions that we ask ourselves, right? So it's our job to kind of coach you, teach you some questions to ask yourself. But God, I hope you come up with your own answers. You know what I mean? Like, it's got to be you. It can't be me telling you what to do.
Right.
It can't be Sebastien telling you what to do. Like, you got to come up with your own stuff. And then what we can do is then get clarity around what your goals are and help you build a path to get there.
Awesome.
Predictable.
Exactly. That's awesome. Great stuff. All right, man. This was awesome. I think we've definitely covered a lot of ground and content. In closing, is there anything that you just like to share with the audience? Anything that we haven't talked about that comes to mind that maybe be additional value you want to leave us with?
I'll say this. This is something, as I've been writing my next book, that I've been thinking about a lot, is that you are where you are in life because of who you are in life. I don't mean that judgmentally on anybody. I mean that for me. I mean that for Sebastien. I mean that it's just the human condition. It's the human experience. It's the human journey. We are all where we are in life because of who we are. And money is one of the most important things. If you get the money game right, if you get the relationship with your money down, and you understand the role that money as a tool plays in your life to help you live the life that you want to live, it will be game changing. And so my encouragement to you is don't fall into what everybody wants you to think, where you got to just like go to school, get a job, put your money in a 401k, give it to a money manager, and just like offset that risk to somebody else. You need to grow. You have a responsibility. I call it the 4 F's of life: faith, family, fitness, and finances. Faith, family, fitness. I'm not going to do a whole thing. I've done a lot of content on this, but faith, family, fitness. We all know that we cannot outsource our success in those areas, right? Like, our pastor is not going to improve our relationship with God. We got to do that ourselves. I can't have Sebastien be a better husband and father for me. I got to do that myself. My fitness, I got to eat healthy. I got to work out. I got to be, if I don't, well, the results are going to show. Right. Somehow with finances, we've been duped to believing that we could just shift that responsibility to somebody else. You got to become who you need to be with your money to accomplish the level of life that you want in all these other areas. And when you do, everything will be different, and to me, that's what drives us to help people see that and start implementing a plan to do that.
Awesome.
Cool, man.
Again, thank you very much, Chris, for
your time.
Fun. There will be links in the description below for when are you going to be releasing the book? Have you a date yet, or?
No, there's no hard date yet. It's literally in like the 3rd version of editing on the back end. It's really close. I mean, I would say within a month. Within the month.
And so this is a revision of your existing book, right?
It's not a revision. What it is it's like a 2.0. Like, the first version is great. So it's not a replacement of that. It's like an additional, it's like taking it to the next level.
Got it. And so is it going to have the same name, or?
Yeah, it's going to be Cash Flow Hacking 2.0.
Cash Flow Hacking 2.0. Awesome.
Yep.
Awesome. So look, when that comes, we'll definitely really, announce it, and
we'll do more videos, and we'll share it out, and I'll do a free offer for your audience, and we can do all sorts of fun stuff. So
that'd be awesome. Great. So again, guys, if you like the content, if this was of value, make sure you like, subscribe, and share. Check out Chris at life180.com, as well as his YouTube channel, Life180. Make sure you keep on coming back for more financial tips, education, and value. We love you, and God bless you.
All right, guys.